This is your tech news briefing for Monday, December 19th. I'm Zoe Thomas for the Wall Street Journal. Imagine you're a YouTube star. You've got a large following and you've been posting videos for years. And then, out of the blue, you get a call asking if you want to sell the rights to your back catalog. Well, a growing number of people are finding themselves in this position as investment firms look to lock up income streams from an increasingly wide range of places. Here with me to talk about this trend and what it means for YouTubers is our reporter Miles Kruppa, who covers Google. Hi, Miles. Thanks for joining us.
Thanks, Zoe.
So the first thing that I want to know is, who and why? Who are the investors buying these back catalog rights to YouTube channels, and why are these old videos seen as so valuable?
Yeah, so there are two main startups doing this. One is called Spotter, the other is called Jelly Smack, and a smattering of smaller ones. But those two are the ones that are reaching out in the largest volume to these creators. They've raised hundreds of millions of dollars and earmarked a bunch of money to go do these deals. The idea really is that sometimes you get spikes in viewership in old YouTube videos as creators post new things that can sort of relate to their old content, right? So you'll hear these stories about creators all of a sudden getting hundreds of thousands of new views on an old video, and that brings in a lot of advertising revenue. So what these companies are doing is basically buying the rights to earn that ad revenue over a period of about 5 years. And basically they're betting on the sustained growth of these YouTube creators and the advertising economy that's built up around them.
How valuable do they think these old videos will be?
I mean, it's not uncommon to hear of deals that stretch into the millions. There's a bit of an art and a science to this. The companies say they have machine learning algorithms with thousands or even millions of data points they've collected across a bunch of different YouTube channels that can help them predict just how valuable these will be. And then typically what they'll do is offer cash up front to that creator equal to about 80% of what they expect the value of those videos to be over the next 5 years.
I mean, this sounds like a pretty sweet offer, but I bet for YouTubers who are approached, there is bigger calculation here. So what are some of the possible drawbacks that they might have to think about?
It's very difficult to guess how valuable these videos could be in 5 years. All sorts of things could happen in the middle. You could start posting more, start posting less. Your type of video could go out of favor. So in some ways, the companies are capitalizing on that uncertainty and saying, we're giving you a bunch of cash right now, and this lowers your risk in terms of building a business as a creator. And so if a creator has, ideas for what they could do with a few $1 million, start doing merchandise, start upgrading their production quality, hire more people. The creators I've talked to said often it makes sense if you have an idea for what you want to do with the capital. If you don't, and this money might just be sitting in the bank, it's easy to see how in 5 years one could end up regretting this if it turns out the actual value of those videos is double or even triple what you might have thought they were worth at the time.
Let's talk a bit about the bigger picture here for YouTube advertising because, the ad revenue sharing structure from YouTube really helped kick off this creator economy that we have today. But what's the situation like now?
Yeah, that's right. So YouTube gives 55% of the advertising revenues on long-form videos to basically most creators who are trying to reach a large audience on YouTube, people with more than thousands of views on their videos. So that's been a really good thing for a lot of online creators. It's certainly better than most other video platforms in terms of the business opportunity for actual content creators. What's happening right now, though, is that YouTube's ad revenue had its first year-over-year decline in the third quarter this year. And there's just been a sort of cooling off in the advertising world more broadly. So the trend line is not looking great.
Can you tell me what this trend then means for these kinds of deals going forward?
It makes it actually more attractive for creators because we're actually seeing a scenario play out, stagnating ad revenues overall for YouTube that potentially threatens their growth into the future. So if you can take more money now and use it to go into new things or upgrade your production, that could be an attractive thing. I think for the companies, one of the big questions will be, how can they also figure out a way to make money from the rise of short form video? So we're going to see YouTube roll out ad sharing from short form content like TikToks starting next year. And a lot of people in the creator economy predict that will take some share of view time and advertising revenues from the long form content. So it'll be really critical for these companies to capture some of that if they want these bets to pay off in the end.
I mean, that's interesting. Does it suggest that we might see these kinds of deals in other parts of the creator economy, beyond YouTube?
It's difficult to say just because other platforms don't quite have the same advertising sharing structure that YouTube does. So it does seem like a very specific to YouTube phenomenon right now. But I think you're certainly seeing other tech companies trying to figure out a way to reward creators in the same way that YouTube has. Even Elon Musk, since taking over Twitter, has sort of mused, how do we start our own video platform and reward creators in the same way that YouTube does?
All right, that's our reporter, Miles Kruppa. Thanks for joining us, Miles.
Thanks, Zoe.
And that's it for today's Tech News Briefing. If you want more tech stories, check out our website, WSJ.com. I'm Zoe Thomas from the Wall Street Journal. Thanks for listening.